Good morning, everybody. Hey now! Gold Standard Radio Network, February the 23rd. Almost through February, if we can believe this already. 2026, 6:50 a.m. from the Gold Standard Radio Network. Hit that bell notification, subscribe to the channel, become a member of Jabroni Killers as sun is about to rise at daybreak here in southern Ontario, where it is seasonable day, slightly colder than yesterday with a little more snow, but powdery snow this morning because it's about 26 degrees J versus 32 degrees yesterday. So the snow is a lot fluffier and maybe actually will stick around today. But let's see what we got going on here with the coins this morning at 6:51 a.m. The coins were actually down again. The Bitcoin price, look at this. They finally had a little bit of movement yesterday as the market was opening on Sunday evening, and the movement came in to the downside. And you can see we briefly came in yesterday. We're gonna want to go out into the, bear with me here, we'll go to the 3-hour time frame, and it gives us a better look because we've been stagnating. Where's my I was going, come on. I don't have time to fix that today. Of course, that shit would change for whatever reason. So this is gonna suck. Everything's all discombobulated on here. I don't know what's going on with this. Maybe I just got the phone backwards. No, it all went to the left side. So this is gonna be a horrible update. I apologize for that. Everything is on the wrong side. But we can see where the Bitcoin price, the volume came in. This is horrible. Like, what is going on? The Bitcoin price right here dipped below that 66,553 right there. We see that? Right, we dip below that. That's your 200-day moving average, and that's your critical support, because we know if we break that with the volume, and it's possible, you would come all the way down to 51,000 like that, right? And that's what we're watching. Was this just a preliminary fake out to the downside to get people thinking it's going down, get the longs out, get the shorts in, just to quickly reverse the other way? Or is this going to attempt a breakdown? And if we confirm a breakdown, see, that makes it even harder to zoom in. If you try to confirm a breakdown, the way to do that would be you come back up to this 200-day moving average in the weekly, tap it, get rejected, take out this low right there, right? Take out that low that you just had right here, and then that's confirming a breakdown. So it's going to be very important, very interesting as we come back up and try to touch this major upper resistance now, because we're below it, right? So that's what we're watching in the Bitcoin price in the short term. If you want to get short-term bullish, you must get back above that level, that green line, right? So that's what we're looking at there. And then that always does that. It just skips around. Ethereum, the same thing. We had a little leg to the downside. We got rejected by the 3-hour time frame moving average, bounced just above the 17, just above the $1,812, right? And that's your major support level, and that's the area that you bounced on back here on about February the 5th, and it used it as a major support level. Now it's been consolidating sideways to down since the reactionary technical rally off of the trading level, right? Now we're trading back down to it, and we've been talking about, if we continue to trade back down to it, your major underneath support is that's a big price range down there. I can't even see it in the 4-hour time frame. It's way down there, and it's sitting down there at about $1,036, and that's the bottom part of that trading range right there. And you'll come down there very, very quick if you break below this top part of the blue trading zone, sitting there at $1,812, right? And that's very critical level in the Ethereum price. And now we've had some movement, we're getting closer to some levels that actually matter, that could have some heightened volatility in the price action, as we can see with the XLM price. We came all the way back and hit a major resistance level where we wicked up just below that 18.75 resistance level. Now we're almost back down exactly to where the support level was that we bounced on back on February 4th to February 6th. And now we're almost back down to there, and that is the 14.5 cents, or that purple color of support and resistance, right? We're almost back down to that. And you would think that you might get a bounce off of that, but the critical test is if you fail to hold that and you confirm a breakdown, your next move in XLM to the downside is pretty far to the downside. It's down to about 12 cents to 10 cents. And that's a big fall from 14.5 cents, right? That's 25%. So this is very critical, because if you can hold this 14.5 cents, you can try to make another run back up there at that 18 cents, the area that you got harshly rejected, as we anticipated and thought we would most likely do. Even though I am not a financial advisor, these are only my own personal opinions on the market, right? If we scroll across to the XRP price at 6:56 a.m. as I'm almost to work, and then I'm gonna have to let you go. It seems to be about a 5-minute is when that shit comes up. We had the dip below the moving average right there, the 200-day. All these coins are in the same spot of the chart for the most part, right? Not every single one, you could find one that's not, but primarily all of them, right? We're coming back up to that 200-day, and this is the critical question today with the XRP, with the Bitcoin, Ethereum, the algo, and the rest of them that we don't have time to look at. Can they break these resistance levels that we dipped and fell below overnight and get back on top? And this was just a fake out to the downside to grab some liquidity before the next major move to the upside? Or is this going to all come back up to these areas and get harshly rejected? And if we get harshly rejected, and that's what we're watching for here with the XRP, you can see we're coming up to it in a 3-hour time frame. If you get harshly rejected here by that green 200-day in the weekly, it's going to send the cascading effect across the coin market, and the coins will come tumbling and come tumbling down quick, and it'll come tumbling down to 89 cents in XRP. But if they break, and this was just a fake out to grab liquidity, all of these coins that I just mentioned will pump hard. I repeat, hard to the upside. And there will be big short-term pumps. And the XRP top potential in that case, in the short term, would be the 200-day moving average, or the 100-day moving average in the weekly time frame in blue from left to right line, and that 50-day moving average in red, sitting there at $1.79 in the daily time frame, right? The daily. So those are your critical areas to watch, as it's hyper vol. I think this is a last 10 days was a consolidation, boring sideways action. This week I'm dubbing it hyper volatile, hyper volatility. Lots of action, lots of price movement, lots of volume coming back in. That doesn't mean it's buy volume or sell volume. That just means people, movement are coming, and activity is coming back in. It's going to be a lot of movement this week. So you guys better be prepared. You better be ready. If you don't have a game plan, your emotions are going to get tugged this way, tugged that way, tugged this way, right? You're going to have to be emotionally ready for what's going to take place this week with all this volatility, right? There's going to be a lot of volatility. I'm just warning you right now. That's a gold standard warning. The US dollar was down big last night, about 0.36%, after the Trump said he's going to up tariffs to 15%, even though the Supreme Court, the federal Supreme Court, said that his tariffs of whatever they were, 50% and whatever, were too high. He didn't have the authority without congressional approval to unilaterally place tariffs on countries of that high. So he's going to try to use other legal ways to put tariffs. So the dollar went down, silver went up. But now overnight, the markets have corrected, and that seems to be just a fake out and an overreaction from the weekend to drive liquidity one way, to just an overnight trading to slap them and reverse in the other way as the traders are waking up. That we're trying to front run momentum for the week, and that could be the sign of the great reversal with silver this week, and the US dollar going up and silver going down, right? So we're gonna watch that. And fuck, I didn't change my weed pen out. So we're gonna watch that, which means I'm gonna have a long day at work. I might have to hop back to the hotel on lunch, or just go. Oh no, I'll go buy more on lunch here. Never mind. It's just gonna be a rough first 6 hours. But that's what we're gonna be watching here in the bullion market because silver was up big at the end of the week. So was gold. The dollar started to trend down. And then we had maybe a potential fake out and market reversal where silver has a down week, the US dollar has an up week. These are all things the gold standard's watching at 7 a.m. and I just pulled into work. So as I drive to my parking spot, the gold standard is once again going to sign off with a message. If you want to become financial independent and an asset millionaire, which means a comfortable lifestyle and freedom, because if you have some capital, you have freedom. The more capital, the more freedom. The less capital, the less free. The more debt, the more you're a slave, right? Because you're a slave to the lender. So as we sign off on February the 23rd, I think it is, the gold standard's going to continue to remind you, you must stay debt free. You must live below your means. If you make $100,000, you must live on $35,000 to $40,000, and you must save, if you can, 25%. But as much as you can. No car loans, only cash for used cars, right? No big mortgage if you can't afford it. Rent if you must, because with rent, there is no maintenance on the home. There is no taxes on the home. There are no replacing roofs or a water line break or a $10,000 furnace and air conditioner combo go out, or the yard maintenance, or the concrete in the driveway, or the sidewalk, and all that shit, right? Or a tree root growing in your sewage line that causes it to flood, and then you have to spend $20,000 to dig it out. Live below your means, stack capital, and invest. And then when you get there, then you make the move. But that's the only way to do it. If you go into consumer debt and you spend every dollar that you make, it really doesn't matter if you make 100 grand, 50 grand, or 50 million, or 50 billion. You will be broke if that paycheck goes away, if you never save and invest anything. Signing off from the Gold Standard. We appreciate you listening to another live Gold Standard Radio Network. We will be back on February the 24th, 2026. Jay.